Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced above the previous VPOC of 2101 half, and on the upside, tested 2109.75. Now, given yesterday's pretty strong liquidation move, the expectation today is for the market to balance within a range. Bigger picture, we are still trading in a pretty wide range, and yesterday was the first decent pullback to a prior high volume node and a strong area of support. So from here on out, even though we can still head lower and we can retest 99 to 2101 half and possibly even the 93 half to 95 half area, the idea is that from there on, the downside potential would be limited and buyers can defend and still be active at 93 half to 95 half. And from here, the market can simply balance in a range. So on the upside, if we're holding above 0775 to 0975, ES can test 1175 to 12 quarter, 14 half to 16 half, which marks the bottom of the balance area that we broke down from, and sellers can be active at 14 half to 16 half on first test, and the market can start balancing again from that point on. On the downside, below 0775 to 0975, the market can quite easily just fill the gap and retest 99 to 2101 half. Now, that's an area where buyers can still be active at 99 to 01 half, but that's a spot where we are going to have to see something in real time in order to consider trading it long back up towards the micro bull bear. So, if we're seeing too much weakness down there or the momentum is too negative, then we'll have to be a bit more careful because that's an area that's already been tested, and we just want to be a bit more cautious at that zone. So the only time really that 99 to 01 half makes sense is if we're seeing signs in real time that indicate that that may be the low of day. But if again we're seeing strong momentum to the downside or the other markets are relatively weak, then we may want to wait for 96 or 93 half to 95 half before we consider entering long for a move back up towards the 05 and 0775, 0975. But the main idea today is that the market is more likely to be two-sided. It's more likely to be range bound. So we just have to be careful initiating continuation setups, right? So if you're entering a trade for a continuation move, that's where you need to be cautious. But first test of zones will likely provide at least some sort of reaction. So even the 99 to 01 half, most likely will provide some level of reaction, but we're just going to have to be a bit more defensive at that zone because it doesn't have to shut off the downside. Now the 93 half to 95 half, that's a zone where we can be a bit more aggressive. Below that, we have support 90, 92, and that's an area that can cap the downside. The selling can shut off at 90, 92, and from there we can turn back around towards 99 to 01 half and possibly even back up towards the 07, 08 area. So the main focus is going to be on fade setups. We're going to be more careful on continuation and breakout type setups. In the event of a breakout above 0775, 0975, that would indicate short term that the buyers are gaining control again, and above that, the primary inflection point is going to be the 14 half to 16 half initial resistance. Expectation is for sellers to be active there first test, and we should see a relatively quick rejection of 14 half to 16 half. So if the market goes up there and it kind of just starts drifting or balancing and it's holding up quite well, then that's not a zone that you're going to want to continue holding short from, because then we could just go up and test the high volume node at 17 half, possibly even the previous high at 19 quarter. So if the 14 half to 16 half zone is going to hold, then we should see a quick reaction there on first test. And again, it is a discretionary trade idea. It's not something where it's an automatic short. If the momentum is very strong to the upside and internals are quite strong, then we'll probably have to pass on that or just play defense on that zone. Because we're expecting two-sided balance, focus will be fade setups, but understanding that the market can bounce in a slightly wider range, and we may have to play defense on some of these areas where the upside doesn't have to be capped or the downside doesn't have to be capped. So 99 to 01/2, we can trade it long, but we just have to play a bit more defense on trade management. 14/2 to 16/2, we can trade it short, but again, we want to see a relatively quick reaction at that zone. Within 5 or 10 minutes, you should be seeing a pullback down to 1175 and possibly even 0775, 0975. That would be the downside objective off of initial resistance. So those are the main thoughts heading into the open. We are going to be just overall more cautious and play more defense because we're expecting range-bound activity. So let's see if the buyers can push it above 0775 to 0975 off the open. That'll help us establish the short-term directional bias off the open, and we'll take it from there.